trade networks. And this morning, we'll be discussing some of the opportunities and barriers to developing economic cooperation in the Arab region. Allow me to introduce my panel. First, we have Shwan Taha, is the chairman of Rabi' Securities and has over 30 years of experience in the financial sector. Shwan obtained his biomedical engineering degree from Case Western Reserve University and an MBA from George Washington. In the 1990s, while Shwan was here in the United States studying for his degree, this was during the time when the Gulf War had started. So imagine being here, studying university, and not being able to contact your family for 3 days. No words, no nothing. 3 months, sorry. 3 months. And moving from those times, Shwan moved on to a very successful career managing money in the MENA region, including Turkey, Greece, and Pakistan, where he's worked as part of Franklin Templeton's Mark Mobius Emerging Markets team. And after that, he has done many accomplishments in Iraq with the Angel Investor Network that he's launched, and is one of his company, Rabi' Securities, was the sole manager of the 2 largest listings in the Iraq Stock Exchange. Next, we have my dear friend, Hamdi Hamoudi, is a seasoned professional in the field of finance, specifically MENA equities. With over 15 years of experience in the industry, he has held various positions at Bank of America, Merrill Lynch, and Credit Suisse, before taking the role of head of equities at Arqam Capital. Hamdi's latest venture is as the head of the Middle East Stability AI, a leading player in generative artificial intelligence. In his current role, he will partner with governments and institutions in the region to train cultural foundation models. We also have Ali Al-Safar, a seasoned veteran in the energy industry in the Middle East and North Africa. He's currently Director of Climate at the Rockefeller Foundation in New York. Prior to his role, he was a senior at the International Energy Agency, with many years of expertise looking at various energy sectors in the Middle East of North Africa, from oil, electricity, to renewables. And he'll be adding in a lot of interesting conversations on the future of energy in the region. So without further ado, we're going to be starting with Mr. Shwan Taha. Shwan, if you could just give us a very quick overview on the financial markets in the Middle East and North Africa, and talk to us about the certain advantages and opportunities that some markets have over others.
Well, I mean, you know, I have a problem when you say MENA, because I think an Iraqi today, economically, has more interest with Iran and Turkey than with Morocco. We have no relationship with Morocco whatsoever. A Moroccan probably has more relations with a Spaniard and for sure a French than he will ever have with an Iraqi. Culturally, language barriers, also distance, right? So just the premise of this MENA, we talk about it is a bit a fallacy. I would rather I would be happier if we divide the region into blocks and see investments in between these blocks, all right? So you explain as a fund manager, Templeton, you know, I was investing in equity markets, right? At the time, and this sounds like a different era. At the time, we could only invest as foreigners in Morocco, Tunisia, Egypt, Lebanon, Jordan, Oman, Bahrain, okay? The largest market was Egypt. They started this trend of accepting foreign capital and treating foreigners well, and Morocco. The rest of the region never needed capital, or were at war. Okay, so the concept of the sovereign wealth funds and stock markets in places like UAE, this is really very, very new. This is not. So let's pull back one. All right, now if you're talking about the region, okay, we're talking about a region. If we don't count neighboring countries, if you just count what you call MENA region, we're talking about 500 million people.
Yes.
If you add Turkey and Iran, all right, you're talking about 700 million people. okay? 700 million people that have really very little investment, except for pockets, all right? Very little investments, all right, going between these places. Rabia Securities was set up to facilitate investment into Iraq. Because Iraq went through war, I don't need to give you the history. Guess where the first investor in Iraq was from? Chile. Guess where all the venture capital money today invested in Iraq is from? Silicon Valley. Not a single dollar we can collect from anywhere in the Gulf. Or Saudi. It's a Gulf being Saudi, UAE, Qatar.
Classically, the countries with the
well, yes. So part of me thinks that investing in the region between countries is more political than economical. Why would I spend $4 billion on bloody Manchester United when if I spend $4 billion in Iraq, I could revive a whole economy? Right?
In addition to other opportunities in North Africa.
Fine. See, anywhere you take in the region today is hungry for capital. The places that are not hungry for capital are the Gulf, right? Yet there is really very little effort have been made to establish companies that are regional, establish banks that are regional. I'm talking from a practitioner point of view because this is something I face every single day, right?
Well, thank you. On that point, on banking sector and the financial reforms, Hamdi, if you could please talk us through what is the financial markets going through in the past, if you could look at us, take us where we were and where we are right now.
Yeah, absolutely. I mean, I'll zoom out a bit to your comment earlier that the major markets historically were Morocco, Egypt, Lebanon, Jordan, Bahrain, Oman. I mean, interestingly, out of those, Morocco and Egypt barely survived the last 10, 15 years, and the others are non-relevant. And it's kind of brand new markets that are now actively traded. So in terms of liquidity, you have Saudi, which trades $2 to $3 billion a day, which is larger than some major emerging market economies. So that's kind of one success story we've had, followed by UAE, Qatar, and then you'll get to Egypt and Morocco. But to me, the problem that I have with all of that is that 99% of new issuances in these markets are sales of existing stakes. So the whole point of capitalism and kind of going that cycle from early investors into eventual exits and liquid markets for growth capital doesn't exist. So IPOs are done for the government to sell 20% of an electricity company.
If you could walk us through that case example.
Like I said, 9 out of 10 IPOs are either family conglomerates, large family conglomerates, or government-related entities or direct government entities that are privatizing, essentially. So they're selling 20% of their existing stake, and the money raised from Franklin Templeton and Soros and Fidelity and T. Rowe goes into the seller's pocket as opposed to creating new capital that grows the company and continues to expand. So a lot of these companies are stagnated. So when you look at IPOs everywhere else in the world, if you're Uber or if you're whatever, you're doing it in your growth phase to be exciting and to attract capital and continue to grow. Our market at that level where I've spent 15 years is stagnated. You're just kind of, when your life cycle is done, you're mature, the family's done with the growth element of it. Maybe it's, the father is getting old and doesn't know if anyone's going to be able to run the business. They IPO it that way. They get a bit of corporate governance and independent board, and they sell some of their stake. And chances are the business will decline from there. So that's, as a whole, very disappointing and will never attract the right amount of venture capital if you don't have that kind of proper connection between seed stage, Series A, Series B, eventually into capital market exit. And a lot of those are regulatory issues because, again, usually require years of consecutive profit to list, for instance, or you have to be a certain size. So those are small kind of parameters that you can adjust to get the right life cycle of capital markets in the region.
We're definitely going to be getting into the laws and regulations that are the barriers currently. But Ali, if you could please talk us through the energy sector and how that translates in terms of investments in private sectors. Can you just give us an overview?
So I might just react to what Hamdi was saying because it struck me the way he's describing what happens with companies and their IPOs, and it's a smoother segue into the energy sector. It sounds like what you're describing is rent seeking. Yep. It's not value creation for the long term, and that's where the mindset is set. Rent seeking is the problem of the oil and gas exporters in the region. It's effectively you take a resource, you monetize it, and then you put that money in your pocket. You're not trying to create additional value. And when I talk about the energy sector, apart from rent seeking, to me, it's one of kind of the most tragic examples of the failures in the Middle East and North Africa with regards to integration. What Haider didn't mention is before I went into energy, I was an economist at the Economist Group in London, and I used to cover this region a lot. And when you look at this region, and it's a bit of what Shwan was just saying right now, you've got capital rich and you've basically got labor rich. You've got a group of countries, if you're looking at the Arab Middle East or the Arab predominant Middle East, you're looking at countries that should fit quite perfectly with one another. You've got a capital rich country right next to a labor rich country. If you could trade those two things and equalize in some way or another, you should be able to play to each other's strengths. The same thing holds true for energy. This is a region where you have countries, for example, you've got Egypt, you've got Saudi Arabia, that have a problematic overcapacity in energy creation, especially electricity. Problematic because you don't have anywhere to put this electricity, this surplus. Neighboring countries with a problematic undersupply of electricity and energy. You've got Syria, Iraq, Lebanon. So the very normal win-win situation would be to trade these things, to trade energy with one another. But then you look at the region and what's happening, and some infrastructure does exist, but if you look at even the GCC, if you look at the Gulf, and the fact that these are all linked to one another with electricity grids, they trade something like 7% of the capacity of the grid. It's nothing, it's minuscule. It should be more. And to me, the one thing that's kind of mind-blowing and a real indicator of the malaise of just how little we have done to integrate this region. Take Kuwait. Kuwait is the largest importer in the Middle East and North Africa of liquefied natural gas, of gas. Right? It might not mean very much to you, but it imports 6 billion cubic meters of natural gas. That's a lot. Now, you might ask, okay, what's the problem there? It's getting cargoes from Trinidad and Tobago and Nigeria. You've got Iraq 50 kilometers away. Literally, Basra is 50 kilometers away, burning 3 times what Kuwait imports. I don't mean that in the metaphorical sense. It is literally burning that gas. And you've got Qatar, a couple of 100 kilometers away. That is the largest LNG exporter in the world. It's almost unimaginable how poorly we are doing in the region to integrate. And there is so much, but the flip side of that, there's a lot of upside.
Exactly. So just as much as there's so many inefficiencies that we've already been talking about and we've seen it so much, but we also know Shwan has traveled extensively throughout the region. And Shwan, can you talk to us about some of these private sector opportunities, about some interesting markets, just to whet our appetites?
No, so yes, obviously, where the population lies becomes an interesting market. The competition so far has been to sell into these interesting markets and compete, right? So today we have, if you take any of the larger countries, we have competing companies from Saudi, from Iran, from Turkey, dumping things into Iraq, right?
In terms of manufacturing.
Manufacturing industries. Yeah, I'm not talking about energy. Yeah, exactly. I'm talking about anything from cement to milk.
Exactly, these consumer items.
You talk to any of them and you say, okay, now you're exporting 20, 30% of your production into Iraq. How about opening a factory in Iraq? Zip. Nothing. No. Okay? You start talking to the government of Iraq, say, listen, you have to put some restriction on this dumping, yeah? Nothing, all right? There are no policies that Now, in my stupid imagination, when I went back to Iraq, I was, and started an investment bank in Iraq, was that, okay, soon we'll have companies in Saudi, in Egypt, and companies I know, right? Even further afield, suddenly they want to come to Iraq because we have money, we have population, we can get capital invested in profitable ventures, right? So ideally what you will do is you get, and this is a case in point we have today. I have in my, with me today, a Turkish company wants to establish a factory in Iraq to produce something that is very much needed, which is tiles. Right? Ideally, and Turkish companies don't have money, banks don't give money, right? So ideally what should happen is that this Turkish company come establish, we get the capital from the GCC or banks in the GCC and put it in this, and suddenly we have a factory in Iraq that uses the energy of Iraq, that produces in Iraq, uses raw materials from Iraq, and employs maybe between 50 and 100 people, right? That's heaven,
Yep.
right? They come to me for advice. I give them hell, right? Because you start asking them, where are you going to establish this company? Oh, I don't know. Do you want to establish it in Baghdad or Erbil? I don't know. Where are you going to get the money? Oh, we don't know. Can you get us the money? I said, from whom? Oh, but there's so much money in the Gulf. I know, they don't give you, right? So, it starts.
And we've talked about these sort of barriers that exist in other markets as well. It's because, in other war-torn countries, there's a lot of opportunities in Syria, in Lebanon, various places in Egypt, Tunisia, Libya can even be seen. But, it's the political situation that
it's really more, it's a legacy of years and years of, in the whole region, by the way, of corruption, of so everything we see today in Saudi and in UAE and this, when I was a student in the 80s, there was an article, The Glory That Was Araby. I tried to find it the other day just to bring it here, but I couldn't. It said, very, very simply, we're talking 1987 maybe. It said very simply, they calculated that had we invested like Norway had invested, our oil money since the beginning, we would have been able forever to give every single person in the MENA region a salary without work. But we didn't, right? So we're playing catch up. Right? Obviously, unfortunately, and this is something I shouldn't say in this, the dictatorships have done better than the democracies in the region.
That's the unfortunate.
Right? So if today you start talking about democracy to young people in the region that have democracy, they start laughing. Right? The disparity between education of a Syrian and an Egyptian and a Saudi and an Iraqi is huge.
That's definitely something.
Sorry, which one of those is a democracy?
Huh?
Which one of those is the democracy?
Yeah, Iraq could be called a democracy. Yeah. Okay, could be called a democracy. All right. Yeah, could be called. All right. Yeah.
Technicalities. But we'll be getting to the education and the opportunities for the youth in the last third part. But in the meantime, let's go over to Hamdi. So now we've been talking about various success stories from the private side. Interestingly, we've had conversations about the telecommunications sector. We've seen Etisalat, Zain, QTEL on the telecom side expanding from small countries moving into global markets. Can you just walk us through how interesting of an experiment?
It's a unique feature to those countries, right? And I think it applies to a couple other sectors like the banks as well. So I think a regulatory benign environment allows them to operate as duopolies or historically monopolies and generate excess returns. And that featured them being probably the only non-levered telcos in the world. Their margins.
Break down non-leveraged telcos for some of them.
They don't have debt, so obviously telco is an asset-heavy kind of industry, right? So now with interest rates rising, everybody avoids the telco sector because they have a lot of debt and interest rates go up. But in the GCC, all of the incumbent telcos that you mentioned, so Etisalat, Ooredoo, IE, QTEL, Zain, STC, are pretty much all have net cash balance sheets, which means they're able to expand. Now, the problem is this is indirect taxation. So for majority of expats, you end up paying exuberantly high bills because these telcos end up paying a 50% top-line royalty to the government, and they still own 80% of it, despite it being a listed entity on the stock market. So the government's making taxes, which is good because it's a zero income tax environment. But then what you end up having is still a lot of cash on the balance sheet, which means they start getting itchy and looking for opportunities in more populous countries. So they end up expanding to Turkey, they end up expanding to Egypt, to Iraq, and as mentioned with the 2 listings that we had in Iraq, those are both Gulf DNA kind of entities with QTEL and Zain. So it's quite interesting. The same with the banks. I mean, all the banks in the region have the highest returns on equities in the world, partly because they're Islamic, which means higher margin for the exact same business. But what, again, they end up doing is they get bored with the handful of million people they have in their country, and they start expanding into usually more familiar territory like Turkey or Arab countries, which is quite interesting. I mean, that's a good opportunity. It does, in theory, create cohesion between those countries where you can have an account here, set up a business there. I mean, ideally, that's where it's headed with some success. But yeah, those are kind of 2 industries where you've seen successful kind of new, by new I mean 20, 30, 40-year-old companies in the GCC expand somewhat successfully into the rest of the Arab world and the Middle East.
So, I mean, you know how I stand on this idea, newly invented idea of Islamic banking. It was invented in the 70s or 60s.
Yeah.
Can you walk us through the private banking corporations that have expanded from what we've seen, the classic heads banking sectors used to be Beirut and Bahrain, and this has sort of evolved over the past few decades. Can you just walk us through where these main banks are sort of expanding?
Yeah, again, it's similar to what we mentioned earlier, right? I mean, the relevant stock markets or banking sectors were Bahrain, of course, Beirut, arguably Iraq, maybe not really, but Egypt to a certain extent. But that's completely relevant. I mean, Lebanon's completely collapsed. It was the Switzerland after kind of a decade-long Ponzi scheme led by the central bank. But yeah, no, now it's kind of Saudi, right? Saudi is probably the largest, UAE second, Qatar. Again, all have kind of preferred funding. I mean, that's where a lot of the excess cash from the oil exports tends to be parked, so it's access to low-cost funding. A benign regulatory environment, so they tend to operate in an easy setup where they can generate excess returns, and then they can take that to expand out of their countries into the more populous and sexier kind of economies in the MENA region.
Yeah. Thank you for that. Ali, moving on from the telecom sector to the oil industry. We've talked before about how Aramco and ADNOC are centers of excellence and what they've achieved so far in terms of managing these massive oil reserves. Can you talk us through what they're currently working on now, and where do you see them in the future?
Sure, I will. But can I also, I know I'm making your life as a chair
No, go ahead.
horrible. But I want to react to something that Shwan just said, because he mentioned Norway, and if the region had invested like Norway had, that sounds tragic. I'm going to make it even more tragic. Norway was an industrialized country when it found oil. But when it found oil, it didn't even know it had oil. It took an engineer walking into the Ministry of Industry, they didn't even have a Ministry of Oil, one day because he was in Norway because his son had cerebral palsy and he needed to get it treated. And he walked into the Ministry of Industry and said, look, I'm a geologist. I have experience in geology. Do you have a job for me? And they said, hey, we've got data here that we don't know how to interpret. Can you interpret it for us? He looked at it and he said, yeah, holy moly, this is a shit ton of oil. Like, this is Ecofisk, right? This is how they started their oil industry.
Now tell them where
Now
he's from.
he found the field, and then they took him to a lodge and they said, create the industrial strategy and the fiscal strategy that will allow us to basically monetize this oil. He did it. He put a cap on what the government has access to. The government in Norway doesn't have access to the fund. It has access to some portion of the income from the fund every year to fund its budgets. So he took away all of the resource curse from Norway. And this guy is called Farouk Al-Qasim. He's from Basra. Right? Search it. You need to see, search it on, there's a fantastic article in the Financial Times called "The Iraqi Who Saved Norway from Oil." He is the person who navigated all of this. And he wrote the oil law in 2007 in Iraq, and they haven't even passed it. So it's not even, all of these things, they're not rocket science. We have the capacity to be able to navigate them, but we don't. So I'm going to keep my answer on ADNOC, and this is basically the quintessential, the most important issue facing the region right now, in my opinion, is climate change. It is the great leveler. We are heating up at 7 times the global average. We've got countries that are already 2 degrees Celsius more than pre-industrialization, etc., etc. So what can be done about it? Effectively, for the oil-producing countries, we might not be in a situation where we have any agency. If the world decides that it needs to reduce oil demand, which it absolutely must if we're going to stand a chance of survival, then we might be at the mercy of markets. So what do countries in the region have to do? They basically have to diversify their economies, etc., etc. What ADNOC and Saudi Aramco have the chance of doing, they're centers of excellence. They've got 50, 60 years of engineering and management experience in the energy sector. They need to find these areas of competitive advantage that can drive them into the clean energy sector. Things like electrolytic hydrogen, low carbon hydrogen, things that will basically require just simple tweaks to the supply chain, to the value chains that exist today, to make them players for industrial kind of energy in the future. And to an extent, they're doing it. But if I'm to be absolutely frank, and this is a safe space, they need to stop obfuscating. They need to stop dilly-dallying, because they've got one kind of foot in the camp of saying this climate issue is not a big issue, and then another saying, okay, we're going to drive forward on innovation.
I mean, just to play devil's advocate, in that scenario where oil demand kind of starts dipping due to sustainable energy direction we're taking, can't you argue that a lot of these countries you mentioned have the lowest cost of extraction in the world and would be the last man standing?
You can.
So do you really need to diversify if you're still going to have demand at $40 oil and your cost of extraction is $10?
Absolutely, but you're losing out. So in that scenario, you've said $40 a barrel oil. They will be the last country standing, because not only are they the cheapest cost of extraction, they're also, for Saudi Arabia and the UAE, the lowest greenhouse gas intensive. So to extract a barrel of oil from Saudi Arabia and the UAE is 1/3 that in Canada, right? So for both those reasons. But if you're talking about $40 barrel oil and a diminished market, they're losing in terms of volume and in terms of price. So revenues collapse. And I don't need to get fanciful about what will happen. We don't even need to get imaginative. The pandemic came and destroyed oil demand for that year in 2020, right? What happened? In Iraq, poverty rates doubled, right? You had every country scrambling.
Yeah,
because
I mean, in all the budgets.
Taxes.
No, in all the budgets, you can see that oil in all these countries, even Saudi Arabia, is a major part of the budget. So once the price goes down, you can't feed people. That's
it. For the pro-cyclical oil policy, or fiscal policy, every time oil prices rise, expenditures rise. Every time they fall, expenditures fall. And so I imagine for an investor, that's a horrible situation. How do you get clarity over what the future is?
You don't. Yeah. This is the problem. Yeah. You don't. And when you explain these things, so for instance, I was in Baghdad in January. New administration, you always get hopes with new administration. And, met all the people involved in the economic policy, the new one, They listen, all right? Oh, Shwan, you're here, come. How do we get foreign investment? And we talked, and they listened, and we're going to do this, And right at the end of the conversation, the Prime Minister said, we're going to hire 290,000 people.
Yeah.
Okay? With one stroke of a pen, he hired 290,000 people on the government.
Can I come at you? I'm really, really sorry, Haidar. Just one more second, because this
Go
is
for it,
this
Jared,
is where
go
the
for it.
malaise is, right?
Well,
So
the-
what we said about oil prices going up and expenditures going up, they do things like hiring. Except when oil prices fall, you can't fire.
Exactly.
Right? So where is the cut going to come from? The cut is going to come from the component of your budget, which is called capex, which is the stuff that drives your economy forward. So you get you get these sticky costs on.
Yeah, that's the easiest thing to cut.
Yeah.
I mean, if you see the budget of these countries, immediately, capex is just went out the window, okay? And then they start, a few years ago, they said, what's your nightmare? This is pre-pandemic when price of oil was actually going down, even pre-pandemic. What's your nightmare scenario? No, in 2014 it went down with ISIS came in, and in discussions with investors, what's your nightmare scenario? I said my nightmare scenario is oil going back to 150, because really at 50, at 40, we were starting to think how to generate cash, make money, bring investments. As soon as it goes up, finished.
And with that point, it's whenever we have these discussions where the last drop of oil will be, I just picture it sort of like the last drop of water in the Mad Max movie. That's not something to brag about. That's a doom that's going to be happening to you. So let's move on to laws and regulations. Shwan has been battling cross-border laws for investments across the North African, Middle East region. Can you walk us through what are the current main legal barriers limiting the increase of intertrade in the region?
Everything is a barrier. There's no one thing or two thing I can talk about. But so we're in the U.S.
Yep.
Okay. Imagine a company set up in Delaware that cannot do business in North Carolina.
Exactly. That's right.
For whatever reason, because North Carolina decided that no company in Delaware should come to North Carolina unless they establish themselves in North Carolina and open an office in North Carolina. So for us today, you have countries like UAE, Saudi to a certain extent, they're moving forward very fast to become the Delawares of the region. You have others. How long does it take to establish a company in Finland? 13 minutes. How long does it take to establish it in Delaware? And by the way, I'm talking by phone with a credit card.
Yep.
Delaware, maybe an hour, because you have to go through a bunch of, from Iraq you have to go to it. How long does it take to establish it in UAE? 3 weeks. If you have money. Right? Forever if you don't. How long does it take to establish it in Iraq?
9 months at least.
10 months. 10 months if you know what you're doing. All right? So, and then if you want to establish it in Delaware, try to do business in Iraq. If you establish it in UAE, try to do business in Iraq. None of these guys sat down. The other thing is, they're still competing like children, right? Forget by competing like children, I say, open
the cross-border opportunity.
Forget correspondence. Open the newspaper today. Yep. Right? I mentioned Manchester United, but there'll be probably 3 other stuff like that. News grabbing, I don't want to say too many words, but sword fighting. Let's not call it anything. No. Who has the biggest? Which sheikh has the biggest dick?
Anyway, massive funds are being spent.
No, yes, okay, but okay. Tell them, company here. I'm not talking about Iraq, Syria, Egypt. Between Saudi and UAE, right? You can't. Right? Saudi still would not let a company established in UAE to do business unless the headquarters is in I don't know, in Riyadh or wherever. Did they sit down together and figure out how to bring the region's GDP up to? No. I mean, so you're telling me barriers, regulatory, it's all barriers. I mean, there's nothing in the region that encourages anyone to establish a cross-border business.
And on that point, if we can, Hamdi, you've dealt with trying to attract foreign investors from across the world into these regions. Can you walk us through the main challenges and the main
I mean, the points have been pretty much made, right? I mean, first of all, you don't have cross-border activity, so the population opportunity for each company is limited by their borders most of the time, right? I mean, you go to China, you have 1 billion plus. You go to India, you have 1 billion plus, or 200-300 million populations. At least for an emerging market to start getting interesting. For us, the population size is small, so unless you're a commodity business, right? I mean, if it's a consumer business, we graduated from non-classified to frontier to emerging markets in the last 10 years, which is cool. So MSCI classifies countries based on their GDP, their opportunity, their growth. But fund managers, when they come to invest in these markets, they come for compounders, right? They come for
Can you
consumer.
explain the compounders?
A business that grows with population growth. It's not a stagnated business it's not a cyclical business based on a commodity price. It's something that grows with the population. So you go to Egypt or you go to Iraq and say 60% of the population is below 25 years old, something like that. I mean, that's the stat you want to get excited about a market. But when your markets are limited by borders and are single-digit millions, that's usually an issue. The other reason is obviously the kind of GDP or just very much the returns in those markets are very highly correlated to oil, right? So again, you're very much a cyclical market. Whereas when you try to go to Egypt, which is kind of where things get exciting, we'll leave that discussion for later, but that thesis just simply hasn't worked over the years. So it just tends to be the GCC countries, which are disguised as emerging markets, but are ultimately commodity plays.
No, he's absolutely right.
So just to let the audience know that we will be opening it up to Q&A. So if there are any questions that you'd like, we'd ask you to just queue up over here. Ibrahim is our moderator. So once we get a few going, we'll start taking some questions.
One thing before
we're not going to start this.
Yeah, one thing before you go. We still haven't discussed the danger of... So yeah, this is very nice, cooperation, cross-border trade, it's very nice, okay, and it has to happen, why does it have to happen? Really, we're looking at it from the point of, businesses will grow, we're not looking at it from the point of how dangerous it is to have countries bordering each other in such a volatile environment where the GDP per capita of Israel, an Israeli is $44,000, and of a Lebanese is 500. Yep. Of an Iraqi is 8,000, and of a Saudi is 20,000. Of a Qatari is 55,000. We saw what happened in 1990, right? The whole region went into turmoil because one dictator said, our problem is Kuwait. In one night, he took it over, right? That would have never happened if he didn't have economic problems, if there were cross-border investments, okay? No one attacks the next country if they have investments in that country. No one does it. If you look at the
mutual
big
cooperation.
Yes,
so much better. It's more productive.
Today, would you ever think U.S. will attack Mexico with all the problems they have? No, it's not because they're democracies, because they have a lot of integration between them. This is not going to happen, right? In our region, there's no integration. You're just looking, turning and today it's even worse. You have the internet, you have the TV. You're turning TV on. And you're looking, in Saudi, we're building a 170-kilometer city, and the guy in Syria doesn't have a toilet, That doesn't work. At some point, there has to be, if it stays like this, the danger is not, we're not creating businesses and investments won't grow. The danger is at some point, that will create a clash.
Yes, a cultural stagnation, and it's a lot of things that need to be done. We want to move on to a topic that we feel can cover a lot of a country that we want to use as a case example in our discussions. We want to talk about Egypt today. Egypt is an interesting country from terms of its economic population size and potential to grow. So we're going to be going through Hamdi, if you can talk to us the main opportunities for regional Arab investment in Egypt.
I mean, Egypt is a quintessential kind of economic opportunity on paper, right? 100+ million population, young population, in theory, growing middle class, kind of productivity, education to a certain extent. I mean, all the ingredients are there. You couldn't have generated a penny there over the last 20 years if you had invested, with minor exceptions, right? So again, those are all self-inflicted issues, but the opportunity is definitely there. So as mentioned earlier, a lot of the kind of successful industries in the GCC that are capital rich, the first place they look to expand in Egypt. Every single bank CEO I've met of a top 3 bank in a GCC country, in their to-do list is they're either already in Egypt or they're expanding into Egypt. If you're Savola and you're doing food products, if you're a telco, they're all kind of moving into Egypt. The opportunity's there. The problem is, I mean, at the moment you obviously have the crowding out of the private sector by the military, obviously after Sisi came into power. Again, that was a stabilizing force, fine, but eventually, and I've visited the Ministry of Economy there very recently, the plans are there. So they want to put kind of red lines between where the army can invest and where the army can't invest, and where they cannot, it's free for all for the private sector. Again, it sounds good on paper, it needs implementation. Egypt's market cap to GDP is about 15%, which is one of the lowest in the world. You want to be at least at 100%. Most emerging markets are somewhere around there. So again, there's a massive opportunity. It should be, I mean, their current account deficit is 4%, but that's only held up by remittances from expat kind of diaspora Egyptians in the GCC mostly. But if you look at the trade deficit, it's alarming for a country that has resources and human capital. So the program that they've put in place that Turkey and Morocco have been successful at is if they just replace 25% of their imports to local manufacturing, they break even. And then that becomes a sustainable, exciting economy to invest in. So the fixes are there, the fixes are simple, all the ingredients are there. Egypt is a great example, and it is working. Like, people are trying to invest there with varied success, but they have a plan in place now, they just really need to implement it.
Yeah, no, but so when in the mid-90s, when I started investing, Egypt was the first country,
Please tell us about it.
I went to in the region that was exciting. They had just started a privatization, and many of my friends had gone back and established investment banks there. The star of them was EFG Hermes, and it was called EFG and Hermes, the other company, and they merged, etc. And so, ironically, I looked at that, or stupidly, I looked at that, and I said, oh, now we can establish something like that in Iraq. so let's start Rabia Security, because they're, and by the way, like EFG in other economies where they suddenly started privatizing and looking at the private sector, these investment banks grew very, very quickly, whether it was Turkey, Iran,
So which were the big, let's say, the big news-striking deals that were privatized in Egypt?
They privatized everything, from cement to steel to banks, So there was a program of privatization, putting things on the stock market, that I was actually, in my opinion, quite successful. I mean, yes, I know they're in a dire situation now, but imagine if these things didn't happen back then, they would be in a worse situation, They start having a thriving stock market. We, as investors, when we went there, you were excited, because you walk into this fantastic cement factory and you see the population and you see the numbers. They had good accounting, which many other emerging markets didn't have. And we invested. Whatever they brought in the market, we bought, and many of them actually were for expansions. Right?
And that's the important thing, is you need to establish international standards for your stock exchange, for your banks, in order to plug into the international world, and that's one of the main things.
That's many people don't understand that.
And that's one of the barriers for a lot of other countries in the Arab region. is their apprehension to adopt these international standards and in order to compete on a global scale.
Also, that many don't understand that we have a term in Iraqi, capital is scared. Right? Once it sees some barrier, it goes another way.
Yep.
Right? And with all the announcements about investments in the region, etc., the barriers are still there. And when you come, it's very nice for MBS to announce $30 billion, 6 will go here, 7 will go there, I don't know what. I think if he just talked to 2 people under him, they will laugh. They will tell him, how are you going to invest this in this? We can't, yeah. So
I mean, we're constantly battling the marketing and the fundamentals.
No. It's just there are barriers, for this, for these. So as I explained, if you even pretend that to dissolve these barriers, the money will come, right? There's no reason if a guy sitting in Silicon Valley gives you money to invest in startups in Iraq, and a guy sitting in Saudi with a venture capital says, no, it's too dangerous. Right? It just doesn't make any sense, But why is it that? Because explaining to the guy, and he understands some risk, and you tell him, listen, these are the risks, take them, I will take care of the logistics. In the Middle East, he just looks at you, he says, no, why? We're not investing in Iraq right now. When you ask why, you really get into a point where it's more politics than economics. The other problem we have in all the region is once one of them does it, everybody does it. They don't look at any other thing. So suddenly you have this hole that everybody wants to go through, and the prices go up, and the crashes happen, and so what is it? Fear of missing out, FOMO. Once you have one, suddenly like there's a line, right? in everything.
So speaking about things that need to be happening, Ali, can you walk us through what Egypt is currently doing with their energy sector and what they need to do going forward?
Yeah, I mean, I could talk to you a little bit about the Egyptian energy sector, not because the energy sector is particularly interesting, but because it might have some lessons for the rest of the economy in Egypt, because actually it is a somewhat of a success story. This is not any sort of I'm not advocating for the government here. I'm just talking specifically about the energy sector. Essentially, in 2014, Egypt had a 25% deficit in the electricity that it could generate. So demand was far higher than supply, and you got blackouts. And what they did is essentially do a few very targeted reforms that almost overnight meant it was possible for Siemens at the time to come in and completely upturn the whole thing. And so they went from a 25% deficit to almost a 50% surplus in electricity within 5 years. Now they have a surplus. And the reason I think it's quite interesting is, they did things on subsidies, they did things on feed-in tariffs, which is a mechanism to kind of incentivize that investment. They did it quickly, they generated what they needed to generate, but they've also kind of, because now they, coming back to my initial remarks, now they have a surplus of electricity that's also problematic. They're using that as an opportunity to do the kinds of integration that I think is probably going to be necessary in the long term. So if you look at what Egypt's done, it's got a line going down to Sudan. It's got a line, or it's signed an agreement to put a line to Saudi Arabia, to Cyprus, to Greece, to the Levant. And so it's basically expanding its network so that it can export and import electricity as needed. So that's one area of, I think, the economy where they managed to do quite well. The thing about Egypt is that you look at the size of the population, you look at just the kind of the emotive place it plays in the Arab world. It's always been at the center. It is, the center of a lot of culture, a lot of history. It's got, but it's never reached potential, right? And I'm not sure that it's got the ingredients to reach potential. But if they did what Hamdi just said, if it was, import substitution, industrialization, so you just 25% of your imports are now Egyptian made, that's great. But try convincing the IMF of that, and they're completely beholden now because they're in such bad financial shape that they've just had to keep going back to the IMF. And those loans always comes with strings attached. And if you try to put in things like local content requirements, then I imagine that's not gonna fly. And I honestly think they're in quite deep trouble because of the fact that, I mean, you see what happens with inflation. It's at 40%. The Egyptian pound has almost crashed this year. Loads of poverty and very, very few tools to deal with the kind of macro risks that are there. But I don't know because I'm racking my brain. This whole conversation about regional integration, about all of this, we're looking at a bunch of students who can change the world because they come to Harvard. And we're just giving them such horrible messages. Like, you know, it's, as in, like, it's just, there has to, again, it might
It's
just
an
be...
intellectual debate.
It's an intellectual
That's why we
debate,
wanna
but
have
look,
it.
yeah.
It's important to have.
No, but it's about framing. Look, we're painting to you a story of a region that is not reaching its potential. And I think the only thing to kind of look is the upside is greater because of the fact that the baseline is so low.
Oh, but let's not end, but let's say something optimistic. In 2005 was my first trip to Saudi Arabia. I promised myself I will never go back. Okay? I don't like to be somewhere where they whisked me into a room to have coffee because they told me if somebody sees you with a stick and he will hit you, and they thought I'm a foreigner. They didn't think I'm a Muslim Iraqi that doesn't pray. And just the idea of oh, you can't walk through this mall today because all women, and I mean, just all that crap, you know, that I have Saudi friends abroad and they're very liberal, and suddenly they go there and I mean, it was too much, right?
So now,
I was there a month ago. There was a conference called LEAP, and then I have a client now from Saudi I had to visit. And by the way, as an Iraqi, even I have many, many other passports. When I walk into Saudi Arabia, they look at my passport and they said, oh, Iraqi, tal, go. Okay? We have to talk to you. They ask stupid questions, you know.
but then
Yeah.
tell us about your experiences.
So this time, no. I went, no lines, passport control,
Yep.
Saudi lady, girl. Yes, I still can only see her eyes, but she was now smiling at me, I think, from behind the veil, and talking to me nicely. At 2 a.m., I got to my hotel, nice hotel. There was just a Saudi young man. I said, it's very strange to speak to Saudi young men checking you in. He said, well, the new law doesn't allow client-facing but to be Saudis. The next day we had this conference or whatever. I went to LEAP. I just went with some of the startups we have to look around. It was full of girls, Saudi girls, you know, full of young people. The startups in Saudi, they were all young. And my Uber driver was wearing a hoodie, and he was Saudi, right? And he was listening to really interesting music. Yeah? And so I started talking to him, and he said, no, I told my father I have to make money, I have to work as an Uber driver, or Kareem, whatever it was there. What I'm saying is there are changes that are happening.
Positive changes.
Positive. I also am a true believer that my generation is old. We come with real hang-ups.
I'm not his generation.
Yeah, we come with real hang-ups, you know. But we're dying.
No.
What I mean, if you look at the pyramid in the region, it's very young, right?
It's
very young. Yet, very few countries admitted that that's a mistake to put the older people in charge, right? So places like Qatar, UAE, Saudi, Kuwait hasn't started yet. Kuwait is still when you walk into an office and you meet the person in charge, he's 33 years old. He's these guys, you know, going back and then they immediately put him in charge. So I'm hoping for that, you know, these people will, little by little, you know.
No, I hope so, but
Just, Ali, on that note, let's just take the first question.
You're skeptical still?
no, I just think we need a middle ground. Like
So no. Listen. In an ideal world, this gentleman would be Minister of Oil in Iraq. In an ideal world, right? Go see our Minister of Oil and talk to him. Let him come here and give you statistics about the world and what's
There are
happening.
several ministers who I believe would.
Minister of Finance didn't know if there's a stock market in Iraq.
Oh, that was fun times.
70-year-old, come on, guy, this is, yeah.
I genuinely do not want to stop this conversation. One of the best I've ever heard. Thank you so much for every word that you said. This is very mind-provoking.
How much did you pay him?
My name is Amr Hassan. I'm Egyptian. I live in Washington, D.C., and I work as a journalist. I'm not a student of economics, but I have some ideas, and it all relate to the title of this discussion, which is the future paths for economic cooperation. Do we need one? Do they see a need for cooperation in the Arab region? That's one question. The other one is, we used to believe that economics drive politics. Are we seeing the flip side right now, where politics is driving economics in the region? And the third one is, in a world where we see that that hegemony has been disappearing and we're moving to multipolar, non-polar, or like privatization and multinational corporations moving the politics, assuming that the second question is correct. Do we see that these countries have a valid point to move away from that and focus on centralized government, turning inward, leaving globalization and focusing on what their demands are, away from cooperation, much like the Chinese example or the US with the CHIPS legislation? And thank you.
I mean, I'm happy to take it, and I think the answer to all the questions is the same one, which is we're too small individually.
Exactly
Right? I mean, China can do that with 1.x billion people, right? Qatar cannot do that with 300,000 people, right? Or, sure, maybe Egypt can to a certain extent, but individually it's too difficult. And I mean, Shuan laid out the points very clearly on why it's also dangerous to kind of continue to have zero cooperation to a certain extent between countries. If you're not going to normalize the living conditions and living standards between countries that can help each other. And, like we also said, it doesn't have to be Morocco to Baghdad, right? I mean, that's maybe too wide. So it can be within it certain sub-regions that can cooperate and have historically, right? I mean, my family is traders between Mosul and Halab, right? I mean, that's closer than Basra to a certain extent. It doesn't matter. Borders were drawn in a certain year after a certain war, but ultimately without cooperation it will be extremely difficult. And yes, this doesn't have to be globalization, and we don't have to import, wheat from the US in an agricultural agreement. It can be, comparative advantages. And these comparative advantages go away very quickly if you have bad policy that's leading to rampant inflation. I mean, EGP was the second worst performing currency in the last year, second only to the Lebanese lira, obviously. But then no one's going to get involved. If you have protectionism, you cannot take the money out, and then it's depreciating. So there are major issues that point towards economic integration between certain blocks in the region, and it doesn't have to be defined as Arab. It could be Iran, Turkey, Levant, whatever, right? Kind of wherever it naturally flows, it needs to flow. Otherwise, we're headed in the wrong direction.
Actually, we don't need to import weed from the U.S. The region now is one of the best weed producers.
Yeah.
Wheat.
It's a diverse geography. And we have the landscapes to grow a lot of different commodities and products that could help our region and the world. But Ali, you wanted to add?
I just wanted to add one thing, which is, yes, we absolutely need regional integration. In an ideal world, if you took away politics and you viewed this, like I said at the beginning, there's almost perfect complementarity between countries, between labor and capital, between all of the things that one country needs that the other country has. So that is absolutely one of the key kind of ingredients for future success. The other thing I'm very, very skeptical about is the ability of countries to centrally plan properly. Back in the day, they had planning ministries in some of the kind of older Arab states. They
You
used
still
to
have them. Yeah.
but they used to have ones that function. I mean, but if you look, I don't know if we have any Saudis in the room, but the Ministry of Planning in Saudi Arabia does a national development plan every 5 years, and you can see every single one going back to 1970. And you look at the second line under Bismillah ar-Rahman ar-Rahim, the second line in each one, and I've done this exercise, and I challenge you to do it, is we need to diversify our revenues away from oil. This is, it's 2023, it's 53 years now. So if they were that good at centrally planning, that probably they would have changed that second line by now.
You mentioned something about politics driving the economy or the economy driving the politics. Until now, most governments, centralized governments, are scared shitless allowing the economy to drive the politics. Very scared. Every single politician I meet, I always say, like, everybody says Saddam. In the region, anybody you scratch a bit, little Saddam comes up, okay? And you tell them, like, okay, listen, let's do this, but if we do this, this person or this industry will be very powerful. And, we can't, all right? So every single move they do, first they think how much of this economic move will degrade of their centralized power, but on the other side, you have the entrepreneurs and the businessmen. And it's now a bloody fight. I mean, it's not a normal fight anymore. It's a bloody fight. Before we used to be polite. Oh, do this for us, do this for us, do that for us. Now, in a conference like this a few months ago, I called everybody an idiot, and the members of the economic committee were sitting. I said, you guys don't know anything in public, on TV, and they didn't touch me. Huh?
What should we do about it?
Change the idiots, but no. But what I'm saying, the fight is moving. It's now bloody.
I see the hunger growing among the youth with the increased internet.
It's in their hand. It's in their hand. It's not in. I told you, it's not my generation. We're too tired.
I mean, I've seen it throughout. In post 2005-6, with the increased accessibility of the internet towards the youth, the interconnectivity and the cultural hunger that they have towards the world is unbelievable, and it's a very different generation. And we're going to be seeing some very interesting things coming up. Wanted to get another question.
If we can get everyone with a question to line up here such that we can assess the time properly, that would be greatly appreciated.
Move through them a bit quicker, Haida.
Good stuff. If you could please just introduce yourself and try and keep it concise, because we'll try to go to all the questions. We'll just do a one-on-one.
We still have, by the way, 15 minutes because we started late.
I know.
Okay.
I know, we're not wrapping up.
No. I'm keeping time.
Yeah, go for it.
Thank you very much. This was very insightful. My name is Talal. I'm from the business school. Shwan, you opened today by saying the interest, you have a problem with the MENA, meaning the interest for Iraq are not necessarily tied to the geographical area. But I think also towards the end, you're sort of making the contrast that some countries in that region are making investments, large investments in, let's say, futuristic infrastructure or sports investment, and yet there are certain economic problems nearby. So I was wondering, why do you think there's a special responsibility beyond?
There's none. I'm not saying a sheikh should not buy Manchester United because he wants to, okay? But what I'm saying is that he's buying Manchester United for $4 billion. With that country, with 400 million, they bring up the whole startup sector in a neighboring country. If they had brought it up and they say, oh, I can now spend $4 billion on a stupid venture, let him do it, okay? Why is it responsibility of, it's not It's protection. For me, it's protection. They cannot do this, and neighboring countries are hungry.
Why do you think so? Like, why is it?
You saw what happened in Kuwait many years ago.
But also, sorry, Shwan, if I may come in, it's also self-interest because of the fact that the return on investment is probably going to be much, much higher than what you get from Manchester United.
Yeah,
And avoiding the dialogue of having to deal with this. This involves laws, regulations, setting up deals. This is more of an interesting PR stuff.
No, it's really, yeah, if you want to go to the basic, protection. I mean, if we're talking, Godfather style, but.
Yeah, just we'll invest in your country and we can definitely take this up more later.
I'm a Liverpool supporter. And by the way, to smash this analogy to pieces, the UAE played Saudi today and the UAE won because Manchester City played Newcastle.
Okay.
It was 2-0, spoiler alert.
Over to the next question, please.
Hello, thank you very much for the conversation. That was really informative. My name is Ramadan. I'm from Egypt. I'm a master's student here. I wanted to go back to the tension between Hamdi and Ali's points about the fix to the economic stagnation in Egypt is fairly simple, but the IMF will never agree to it. So I think my follow-up question to that is, what's next? Like, if it's simple but we can do it, what can we do instead?
Sorry, I didn't mean to suggest it was simple. Nothing in Egypt is simple.
No.
Yeah.
I didn't think you were the one who said it was simple. I think Hamdi said that it was
Okay.
a fairly simple fix of import substitution industrialization.
It's not impossible, he said.
Yeah, I mean, they have to do it as the answer, right? So yes, the IMF is a factor against you in that equation. You have to work within the parameters. There's no simple answer to this, right? I mean, there have been initiatives in that direction, right? So you are seeing local manufacturing, you are seeing announcements of projects. I mean, they obviously had the Suez Canal project completed successfully. Now, how needed that was, or did you really need that much more room? I think the new city is unnecessary, so New Cairo. But you have the ability to execute projects, you have the capital, you have the human force. You just need to concentrate that on import substitution more specifically within the restrictions that you have due to the IMF loans, which are, again, taking all the money into dollar bonds and kind of restricting where capital flows in the rest of the economy. So the issues are definitely there. But out of all the basket case economies in the region, this one I think has the most potential in the medium term to reach that break-even point and start to grow and become relevant. And then obviously political interests align there at the moment, which is not always the case.
Hi, everyone. I have a follow-up to that. My name is Ahmed Sabbagh, and I work in finance. I just wanted to ask, a follow-up to the IMF question is, can you really break down what the agenda is of the IMF and why it's holding the region back?
So the head of the IMF, regional IMF, Jihad, very good friend of mine, was supposed to be here, and I scared him off because of this. So.
True story. Please, Shwan, what are your thoughts on the IMF?
I don't have any thoughts on the IMF. I really don't have any thoughts on the IMF. They're there for a reason, and it is supposed to be last resort, and nobody. But I don't see in a region where we're so flushed with capital that IMF should come and solve our problems for some reason. I don't know. I mean, this.
No, I mean, look, I think the IMF before, or IMF, World Bank, Washington Consensus, used to be probably more muscular than they are now. So they do attach conditions to their loans. They're not overly onerous. To be absolutely frank, if you're going to give money to somebody, even if your friend came and he was in a terrible shape or she was in terrible shape and asked for money and then you saw that was being used to snort it up their nose, you'd be like, what's this, And to an extent, if you're the IMF, you need to make sure that the country is not falling into the same traps that got them into the position to ask for a loan in the first place. And so it's really about fixing quite structural issues, and there are structural issues in Egypt. I mean, the role of the army is one, a big one. And so, and subsidies is the other. And on subsidies, it's done a lot, but I think it's running out of road on that, because the next big one apart from energy is food, is wheat, and I don't see how they do that without risking a massive social backlash.
To be very frank, whenever I sat on the IMF meeting, it was pleasantries, which I really hated. Nothing significant was said or made. Or yes, they look at the budget, they say, okay, you have to cut this, you have to cut this, and then the other side pushes back. But if I cut this, I cannot do this. But at the end, we have achieved this, and they write the report. And
it's a lender of last resort.
خلصونا يعني كافي.
Exactly.
Is there any situation where possibly they could restructure the debt that they're in, try to create new terms?
Who? The countries or the
Egypt specifically.
Egypt? I don't know. I haven't looked at it.
Starts with a reform. Right. Can we take the next question, please?
Hi, very happy to be here. My name is Hamza Bargab. I'm a Columbia student, economics student as well. I was wondering if you could speak a little bit more about the effects of climate change on the welfare of the Middle East compared to high-producing countries in the relative north. And do you see that climate change will negatively impact the Middle Eastern economies? And do you see any steps that oil companies are taking towards achieving net zero? And is this a future path for economic cooperation in the Arab world, such as, for example, a path towards a carbon market in the Middle East?
Well, I mean, Ali,
I like it a lot.
that's a
These are
topic very
fantastic.
dear to his heart.
No, and fantastic questions. Like I said, I think for me, it's climate change is the great equalizer. It's the thing that all of us need to probably focus most of our attentions to, because when you get into the climate debate, especially vis-a-vis energy, you talk about 2050 and 2070. Not in our region. The heat is already there. It's there. We've already heated. Qatar no longer cools down because it's a peninsula and the sea is hotter than it ever used to be, right? And so my call to action is for the region to consider climate change, not in the way we have been, which is what will it do to our export markets, but consider it for, we've got skin in the game, we're boiling, right? And we need to talk about being a serious part of the climate action. And there's a mitigation angle, but there's also an adaptation angle. There was a fantastic New York Times report that basically compared the way a Kuwaiti lives in peak summer versus the way a person from Iraq lives in peak summer. And it brought me back to what Shwan was saying about the fact that, that kind of disparity is dangerous. It breeds contempt because it's essentially taking somebody from the 21st century and 50 kilometers away, somebody from the 18th century with zero tools to deal with this increase in climate. There's one piece of good news and there's one piece of bad news. The good news is if you look at the research or the polling data in our region, we don't have lunatics who are climate skeptics. People believe that climate change is happening. But then the bad news is, and I don't begrudge people this at all, when you ask them what that is in terms of their ranking their problems, they don't put it in the top 3. I understand that when the roof is falling over your head because of an earthquake, or you don't have clean water, or you don't have a job,
you don't have food.
You don't have food. You're not going to think of it. But some of the reason you don't have food is because of the fact that we don't take care of our environment, climate and environment. Guys, if you look at the Middle East, right, and you look at water quality, if you look at air quality, if you look at soil quality, everything is rotting. I mean, even what we consider kind of the relative havens. I was talking to Hamdi last night. Check Plume. Look at the air quality index in Dubai and Abu Dhabi. It's not where you want to raise your kids. Everything is bad. And it comes...
There's one thing. When you deal with climate, it's very far-out issue. Right? In our region, capacity of people to think 10, 20 years from now is zero.
Maslow's hierarchy, right? No? It's Maslow's hierarchy. I mean, where are you?
Yeah, no, it's not only Maslow's hierarchy.
day-to-day.
No, it's not. But just the fact that because everything is very short term, war stars, government change, so even politicians really don't think, I'm going to do something because in 20 years this something will pay off. But he wants to do something that in 6 months pay off to someone and to him.
Yeah, roving banditry.
So if you see the cities in the green cities in the Middle East, Baghdad was one of them. Just compare the map of Baghdad 20 years ago and now. It's gone. The date, they call them date groves, whatever, they're all cut. In 1980, Iraq had 33 million palm trees. Today is less than 18. It's all cut. It's all dead. You know, it's just killed. Right? So, you know.
Yeah, but and then
In addition to all the wars of the regions and the damage they've created.
but not every country has been through war.
Yeah, no,
and this is the thing, is that we consider it far. My call to action is to consider it near. It's happening. And this matters with water. This matters with every single thing that is essential to life. The problem we have, the problem we face is a branding thing as well, is try to going to somebody in the Gulf in peak summer when it's 55 and saying, you know, if you keep polluting, it's going to become 57.
He doesn't care.
55 to 57, it's already hot. It doesn't matter anymore.
And just on that note, I mean, Ali, we're going to be having these conversations in the breaks later on. I mean, you know, from the Rockefeller Foundation, we'd love to hear more about your insights, and please feel free to talk to us after the panel. But we just wanted to get to another question.
Hello, thank you so much for your very insightful insights today. My name is Husna. I am from New York City, but I'm originally Moroccan, and I am a bioengineer, so I don't have a lot of economics education, but I did have a question regarding the incentive, essentially, of countries that are from various powers, political and economic powers in the region, in the MENA region, and what their incentives might be in order to achieve economic cooperation. So when Saudi has their multi-billion-dollar city that they're building, and then Assyrian is living in despair. So with that mindset, how is there an incentive for cooperation in the region? And I think this also translates over to the issue of climate change, in the sense that the people that are able to afford certain luxuries right now are able to placate or put off the sense of dire or how dire the situation is, as opposed to people that are living through it now that don't have the means to really put that off by, you know, getting an air conditioner, having certain resources. So that's my question that relates to that, but not entirely.
The incentives we talked about, you know, it's really protection.
It's just protection.
It's you know, you have to, and of course, investing in the return on investment is great if you have a bit of regulation, if you have a bit of law, if you have a bit of protection of assets. You know, it's much more profitable investing in really in Syria or Iraq or Egypt. If you have these, you know, but we don't, and ultimately, as I said, it's protection.
Yeah, and also part of the idea is just avoiding these debates across cultures. If people across with sharing borders were able to communicate a lot more efficiently, understand each other more, they're going to turn around and demand different things from their government because they're learning other experiences, they're developing, and that evolution is something that goes against to it.
You have 5 more questions. Let's go through them, and then.
Awesome. My name is Hussam Nasser. I'm from Yemen. Thank you so much for the insightful session. My question is, you mentioned corruption and lack of regional integration is really what's stopping the economic cooperation in the Arab world, which I totally agree with. The thing is, it's the same thing I heard when I was 10 years old, 12 years old. The same issues still exist today. In your opinion, how the landscape changed, and do you see any hope for improvement? If the GCC would ask you tomorrow to put a plan for economic cooperation, would you do it because you think it's feasible, it's going to happen, or not? Thank you.
So corruption got worse since you were 10 years old, so it didn't get better. It got even more ingenious, you know. So today, unfortunately, in the region, I think it's institutional. Corruption is institutional. It's not. It's no longer individuals, and you can go after one guy and arrest him and hang him, and then corruption will be over. But it's not unique. So when you talk corruption, everybody thinks it's unique, right? I've dealt with many countries, and I can tell you I found more corruption in Finland than in UAE, right? So let's not be too harsh about that, right? I think also corruption washes itself out as you increase competition, as you increase production, as you increase. But to actually just sit down and say, we're going to kill corruption today, and then, you know, you can't do it. Forget it, right? So I don't know what the next part of your question was about the economic policy. Yeah, that I will put Ali in, and he will sit down and write the economic policy for cooperation.
And as much as we would honestly like to continue, but we're told that we only have we have to wrap it up. But we will be here sitting.
Let them ask.
We will
Let them
take
ask.
All
Let
your
them ask.
questions. Let's get one more.
Yeah, let them ask. Yeah.
Rebel. He said it. Do it.
Let them ask.
Thank you, guys. My name is Kareem. I'm a design engineering student, master's student at Brown. I guess my question is, we sort of talked about diversifying investments, and recently, let's say in Saudi, we're seeing, you mentioned it, like things like NEOM. We're having like cities like Oxagon, and it seems like we're investing in really exciting entertainment. We had Jake Paul do a big boxing match. We have Cristiano Ronaldo on a soccer team. How much do you guys think that that tourism alone is going to affect these regions and the economy in these regions?
I mean, tourism is a massive opportunity. So, I mean, for Saudi specifically, your base is religious tourism only and zero kind of recreational tourism. They obviously have untapped kind of water in the Red Sea that's never been commercialized before. So that opportunity is massive. For Egypt, it's massive. It's been the only driver of kind of hard currency. Obviously, Iraq has religious tourism. So there's all these pockets that are important, and there's countries that live off tourism. So you just need stability for that, right? So you can only get so far without being kind of a crazy adventure into war-torn Iraq. I mean, that's not what you want, right? So you want things to improve structurally to attract that. Egypt had some issues, obviously, during the Brotherhood and with the Russian plane, etc. So you just have to minimize these occurrences, and I think the region in general, but Saudi specifically, is virgin territory for tourism, and it could be an important contributor to GDP for all these countries.
Let's take another question real quick.
3 questions left, so if you take them quickly.
Why don't you take all the questions? And
Let's get all the questions.
All the questions.
We'll filter them.
Marhaba. My name is Khalid Al-Muharib. I'm a biomedical engineer from Baghdad, Iraq. My question is, the Iraqi economy is very relied on oil exports right now, and whenever I go to Iraq, I see a lot of malls and like residential developments, but nothing really infrastructure development beside maybe Al-Fao port in Basra, which if we upset any of the Gulf countries or Iran will be very unreachable. In summary, how promising is the Iraqi economy in the next decade or two, and will the Iraqi dinar ever recover? Thank you.
Hi, my name is Anwar. I'm from Jordan, currently doing management consulting in Boston. My question is related to the privatization, especially in the utilities sector. So just wondering, like, your thoughts on the healthy level of private sector's like involvement in that field, in terms of just like maintaining the stability of the governments and those countries in the long run.
Hi everyone, I'm Yomna, a master's student at the Kennedy School of Government. My question is, I want to hear your opinion on whether you think the opportunity of a carbon trading market in the MENA region can promote cooperation. So at the Kennedy School, we've been trying to do some research on this, and we face some challenges that the geography is very similar across the MENA region. So for example, Saudi needs to cut emission more than Egypt, but why would Saudi buy carbon offsets from Egypt through, for example, a solar park investment when Saudi can also do the same? So wanted to know if you think there's potential there.
I'll take the first question, and Ali could take the other question. When I left George Soros, I went to see him, and I said, I'm leaving. He said, why are you leaving? I said, oh, because I want to go back to Iraq and do this and do that. He said, why? I said, oh, because it has so much potential, young population, a lot of oil, everything is needed. And he told me, Shwan, a potential could remain a potential for a very long time, and you have a short life. So you asked about the next 10, 20 years. The potential is huge. It's unimaginable, what you could do in Iraq and how you can grow in Iraq. But, it needs to happen. So it's not going to happen alone, right? You cannot leave it alone and think it's going to happen.
Carbon markets, very quickly, I'm not very optimistic about that, simply because of the fact that it's also voluntary. we have real opportunities to actually trade in things that make a measurable difference today, and we don't do it. So I cannot imagine a situation where they're going to be trading carbon in the future. I think we had one on the management consultancy, but I can't remember the utilities. Privatization, yeah. If the government is not working, then I think that, you know, if you try one thing 100 times over, it's time probably to try something else. And I would probably argue that partial privatization, at least of generation, would be a good thing. Transmission networks are always kept into 9 times out of 10 kept into government hands, and there's a reason for that. But you can start with generation and distribution, and that would be a good start.
All right, well, with that, we have to conclude and we'll say the Arab region is booming with economic opportunities. A diverse and vibrant youth that can absorb global cultures and technologies, making them their own. A young demography that is yearning for interaction across their borders. Travel in between the Arab world has become much more accessible, where many Arab youths are far closely intertwined culturally than previous generations. The Arab region has a vibrant talent pool that has already been contributing to technological, academic, literal, social advances around the globe. We should work to empower and enable this new generation to make the achievements that we have not yet dreamt of. Various wars are fading away, and we are left with a population looking forward to brush off the dust and reassume their presence as global citizens. And thank you very much for joining us today. Thank you, Mr.